105.7 Light FM. Good morning. I got sunshine in the hood. It's gorgeous outside, hitting for a high in the mid-80s. It's 67 now outside.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And the reappearance of the legal beetle means it's time to check in on finances. And I'm not even sure I'd recognize his face now. Welcome back, Phillip Statler from Statler Financial Services. When you disappear on me for a week, my world is not complete, Phillip. It's good to have you back again.
Hey, it's good to be back. Got to see some fall leaves. I had a meeting out in Utah, and man, were they beautiful out there.
You know, I lived out in the mountains for many years, and I love the fall colors, but when it's aspen leaves, it's all the same colors. I've been looking at pictures sent from northern Wisconsin where the maples change 87 different colors. But one way or the other, I kind of miss that around here. Around here, they just turn brown and fall off if they're going to do anything at all, right?
Exactly.
About it. Well, let's set up the morning and find out what Wall Street did yesterday, because yesterday was a fun day, and that's probably going to be one of those when's the other shoe going to drop things, and it looks like it's dropping this morning. After kind of a sell-off on Friday, President Trump said, "Don't worry, everything's going to be all right," and we went up by 588 points on the Dow, up by 102 on the Standard & Poor's, 490 on the NASDAQ. Boy, just pat them all on the head, and they all get happy. And then President Xi in China said, well, no, we're just going to keep those port charges, and I don't even think I want to meet with that turkey from the U.S., and everything kind of went to heck in a handbasket this morning off of tariff jitters, didn't it?
Yeah, it really did, and it's continuing to look that way right now, unfortunately, that it is looking more like Friday than yesterday, unfortunately.
It doesn't take a lot. Even my fear and greed index, the thing that I enjoy following because it kind of measures the mood of the amateurs, fear and greed index has been solidly into neutral for the last 2 weeks, and I've been saying, okay, we normally get into some sort of a panic when there's a government shutdown. Why doesn't anybody care? Well, they still evidently don't care, but boy, the tariff spat that we're having with China now has my fear and greed index way down into the fear range as well. So we may not be worried about the government shutdown, but boy, when we start talking about tariffs with China, that's enough to turn the world upside down, isn't it?
Well, I think it is definitely, because that's a big deal, especially, they're bickering and fighting about the rare earth minerals, which are important to us. I think the other thing too is the shutdown. Yes, it's affecting people, but I think when Trump came out the other day and said, hey, we figured out a way that we can continue to pay the military, that was some relief. Now, I still feel bad for the other people that aren't getting paid, but that was, I think, that relieves some fears too, in terms of getting the military paid and keeping them happy at this point. We're 14 days into this shutdown, and it's at this point, it looks like it's going to be one of the longer ones we've had, unfortunately.
Yeah, I'm afraid of that. I've been saying all along that basically when these things happen, both parties end up focus grouping the crud out of the thing, and as soon as both focus groups agree that one party or the other is getting the bulk of the blame, that party ends up coming to the table and they figure it out. Right now we got those two things that are standing in the way. Probably the Republicans would end up agreeing to extending the tax credits on the Obamacare plans, but then the Democrats have what the Republicans view as a poison pill, and a bunch of Medicaid changes as well, returning a whole bunch of marginally qualified Medicaid recipients onto the rolls. And like I said, the Republicans consider that a poison pill. If the Democrats end up finding them getting more of the blame in the public opinion, well, they'll bifurcate those two things, and the settlement will come pretty quick. But right now, it's the balance on the polls I'm seeing is close to 50-50 as to who's getting the blame. And as long as it's 50-50, those clowns aren't going to move a bit up there, are they?
No, they're not. I mean, and you think about it, why would I mean, the Republicans, I mean, the Congress passed this tax bill, and now all of a sudden, the Democrats want to come in and undo some of the things, and that will just mess up the whole thing because that'll add more to our debt. That won't balance the budget, which we've never had a balanced budget, and I don't know when. But it just causes all kinds of problems, and so I think that that's going to be a sticking point, and it's one of those things that absolutely the Republicans are going to stand strong on because that would screw the whole bill up, and that's been passed, and I don't think you were going to see that happen.
Now, yeah, and some of the provisions in the Medicaid chip provisions that the Democrats want kind of hit two of the GOP hot buttons at once. Number one, the budget bill, and number two, the immigration question. It's a mess up there, and like I said, it's all based upon who they read as getting most of the blame. And once the scale tips to one side or the other, well, that side will end up going to the table and we'll end up getting it fixed. But right now, we're doing absolutely nothing productive in Washington, and it's getting more annoying by the middle. Speaking of annoying, General Motors made a little bit of a profit warning for us. They said they're going to end up losing about $1.6 billion in sales this year off of those expired EV tax credits because they expect their electric vehicle sales to pretty well tank. It's not a report on the first day of earnings season, but it's definitely a harbinger of things that we can look at from some of the heavy industries.
Yeah, it is. It is definitely. When that credit got wiped off the books, it's going to affect the EV sales. They're going to take a $1.6 billion charge. They expect that's going to affect them. They're trading down about 2% this morning. Let's don't forget Ford. Now, Ford is not really talking about EVs, but they had an issue. One of their major suppliers for aluminum had a fire. And so that's temporarily halted 5 production models, including things like the Expedition and the Lincoln Navigator. So that's hurting Ford this morning because that's going to mess up their production in the truck industry too. So not
That's
good news for
not good
them.
news. Ford kind of declared semi-independence from EVs back last year sometime after President Trump got elected. So they won't be affected as much by the EVs, but General Motors basically moved their entire Buick line in the direction of EVs. They had a lot of eggs in that basket, and without the tax credit, they're not looking at any fun whatsoever. Ford was probably rubbing their fingers with glee until the fire hit.
Yeah, exactly. So not
Other
good
other
news there.
junk Yeah, other junk going on that might affect the markets today. Chairman Powell is going to be giving a rubber chicken speech today. If he can pat people on the head and say it's going to be all right, that might save what looks like a pretty negative day to start out with. I know it's a group of economists. I don't know exactly what the group is he's speaking to, but the rubber chicken circuit is active for another about 3 or 4 days before they hit the silent period before the Fed meeting at the end of the month.
Yeah, because they're all speaking. You got Powell speaking, you got Waller and Collins speaking today as well, and then tomorrow you got another whole group of them speaking again. So they're taking advantage.
Why don't we put them on the same stage and just let them have a fight? Oh, not as much free food. Never mind. we are talking about, in an absence of any government information out because the shutdown continues. It is a high holy day today. It's the first blush of real earnings season reports, and we got a running ton of them out there. The big banks lead in like they always do, and of the early blush releases that I saw, it looks to me like we're having a good start for the banks, aren't we?
We are definitely. Let's start with J.P. Morgan. J.P. Morgan came out and they did well. They generated like 700 million more in revenue than expected. Earnings beat. They came in at $5.07 versus $4.84. You would think that that would got them moving in the right direction. However, as we said earlier, futures are not in positive territory right now, and it's affecting basically all the stocks. So JP Morgan is actually trading down right now, about 1.1%.
Hmm. Everything looks like it's negative so far. Any of the other financials getting a good bump for a change?
Well, let's see if we can find somebody that is getting a bump. Hey, you'll like this one. Wells Fargo's getting a bump. Um, so they've got a couple things going in their favor right now. They did beat on earnings, they beat on revenue. Let's remember that the regulators have finally lifted up their asset cap that they can have. So now they can make more money, they can earn more, and so that's benefiting them with their results today. They're up 3.9%. That may be the only financial we see up today because they gave some good prognosis of the rest of the year in the future of better earnings. So, yeah, we'll see.
And some wag is probably going to say they expect that means Wells Fargo's got got permission to open a bunch of new phantom credit card
Yeah.
accounts for people or something.
So then we got the other couple banks. We got Goldman Sachs. Goldman Sachs came in. They beat on earnings by $1.25. Came in at $12.25 a share. They beat on revenue by a little over $1 billion. So you would think that would have them squarely in the green, but it doesn't. They're trading down 3%. Citigroup also reported. They beat on earnings. They beat on revenue. They're trading. They are managed to trade up a little bit. They're up 0.75% right now.
Woohoo!
Yeah. And the last financial I have for you, which is not really a bank, but BlackRock, the big
Yeah.
asset manager, probably one of the biggest ones out there. They came in better than expected third quarter results as well, across the board, and that's got them. They're trading down about 1.1%.
And about the only non-financial I heard about was Johnson and Johnson reported. I didn't get the numbers, but I did see that they beat. Did you see their numbers?
I did. They beat by 4 cents a share, came in at $2.80. Revenue was up, about $250 million more than expected. Let's see what that's got them doing. They're down about 1% this morning. The other one that I had that was not financial was Levi Strauss reported. They beat by 3 cents a share, came in at 34 cents. Revenue was slightly above expectations. And so that's got Levi Strauss. They're down about a little over 1.5% this morning.
Good God. Well, let's tell everybody why, even though you beat the streets, you're still falling this morning. Like I said, it was an up day yesterday. Tariff fright hit the market overnight, 45 minutes before we open. What are we looking at so far?
Yeah, it's a lot of red ink, Dave. A lot of red ink. We've got the Dow Jones Industrial down 382 points. That's 0.83%. The S&P 500 is down $65. That's down almost 1%. And then the NASDAQ 100 is down $308. That's down 1.25%. And let's not forget the Russell 2000. It's probably down the most today, down $36, which is down almost 1.5%.
Oh, crapola.
Yeah, not good.
Let's assume the commodities are doing better.
Hey, silver yesterday hit a record high, up over $50 an ounce. That even goes back prior to the Bass takeover corner of the silver market. So they finally have gone above that number. They're trading down a little bit this morning, down 1.75% at $49.55 an ounce. Gold's down a quarter at $4,122 an ounce. Crude oil is down about 2.5% to $58 a barrel. So that's where we're sitting right now, Dave.
I got you. The 58 really looked good on crude oil, but I was amazed. We were just an inch away from the $50 mark on silver yesterday morning while I was talking about it. I was wondering if it was going to cross it yesterday or whether it was going to back off. Looking across the pond, the Asian Rim market is even less impressed by the tariff battle between Trump and the Chinese than we are. Virtually everything was down by over 1%. The mainland Chinese markets were off between 0.75% and 1%. The Japanese market down 2.5% at the 6 a.m. close. Over in Europe, they don't like no peace in the valley either. The average European index is down by about 0.9% halfway through the European trading day. So we're just swimming in red this morning, Phillip. It isn't a fun day to start it out. And if you're looking at your retirement plans and saying, ruh-roh, you probably want to get a hold of Phillip and find out how to get the risk out of your portfolio. How do I find you now?
Absolutely, Dave. They can give us a call at 863-382-0037 to schedule their core retirement design. Folks, that's just where you and I spend 30 minutes to start out the conversation to see how close you are to retirement, how close you are to meeting your goals, and what do you need to do to get there. Love to have a 30-minute conversation with you. Hey, I want to mention this real quick, Dave, too. We will have ads running next week, but our Shred Day is coming up October 25th from 9 to 1. We will have the food bank there to collect some canned goods and that type of non-perishable items. So looking forward to that. And then, of course, the Statler Financial Radio Show this weekend, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here again tomorrow morning. Good to have you back, my friend. We'll see you then.
All right, man. Take care.
Thank you. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.